There's no reason. I don't think everyone should make 25 to 30% a year with a 10% drawdown. That's very easy. And as long as you're learning and putting some effort in within 3 months and some automation, I think everyone could do that in all honesty with this. Hey everyone, this is Mark Anderson, construction worker turned zero DT hedge fund manager. I know there's a lot of people out there that are looking to start trading zero DT and they're interested in learning where to start. So I'd like to kind of provide my perspective on that and share with you some easy do's and don'ts when you're looking at zero DT and where's a good place to put your focus to get started. I know a lot of people are curious on where they should start, maybe a financial number, what they should get into. So, I mean, obviously everyone can just watch videos and learn. However, in my opinion, if you don't have 50 grand saved up, you should probably be focusing your effort on making 50 grand to just prove that you can do something and be useful to society. However, if you want to start trading and you have more money saved up and you've figured out a way to create income outside of trading, allocating 30 grand is what I would recommend because that would eliminate pattern day trading for you. So you could trade every day, and not only will you make more money by doing that and be able to trade more profitable trades, but also when you have that 30 grand, you have a 5 grand buffer of drawdown. If you were to take a loss, that you would still be in pattern day trading. And then also you're able to create more occurrences, which will help you learn faster by actually trading. And you can also trade everything you're looking for. So I would say figure out how to make and save 50 grand. And if you haven't saved 50 grand, then absolutely no way should you really even be trading. You should just focus on making money. And then if you have saved 50 grand, as long as you could allocate 30 grand to start trading, that's a good place to start. I know some people have never traded or they're just starting their journey to look for information. So there's a lot of good and bad communities out there to learn stuff. So like one I would personally recommend is Navigation Trading is really good to go on there and start to learn stuff when I first was finding options. The main thing is that your trading should be based on backtesting because that's going to make it emotionally much easier to follow through and you kind of have a yardstick to hold yourself accountable to. So I would say the number one must is that you should be subscribing to Options Omega to get backtesting. I have a link for 50% off in my description. Or you could even go to Trade Automation Toolbox and you could use their build your own backtesting tool, which is free. It has less capabilities, but it's a good start to kind of see things for that. And that would be step one of basically where to start. Another thing is if you're starting with 30 grand, just doing a one lot. I don't have a problem with people sizing up and going bigger into it. But what I like to do is kind of use like a 2-week rule. So you're always going to start with a one lot no matter what with one trade. Once you do that for 2 weeks, if you decide you like it, you could size it up or add another trade. And then you basically are going to keep that for 2 weeks and follow through with it. So a thing that a lot of people miss is part of investing is just the act of doing so. So the act of being like, I'm going to do a one lot and I did my research on this and I'm going to follow through with it for 2 weeks, regardless of what the market does. That is the act of investing and the building block of success for trading. So practicing that act, even if you're only making, $5 a day on average with that one lot, it's the fact that you did some work ahead of time, you decided what you were going to do and you were going to follow through with it, and that habit's going to lend to the future. And the thing we need to understand with zero DT is we're trading every day. So if you go 2 weeks, you're not missing out on a big opportunity cost. Obviously, if you have a trade because your back test was completely off, you can stop doing it. But that should be like, okay, now you're in timeout for another week until you're going to deploy that new trade for 2 weeks. So you're just learning from that mistake that you make over and over in time. And that's a good psychological habit to get better at trading. I think backtesting, that's really the practice. That's all it is, because the fact that we can automate stuff and we really don't know what the market is going to do, backtesting is the only thing that gives us certainty. So how I like to look at it is I actually don't care if my P&L is red or green. All of my screens in my entire house are actually in grayscale, black and white. So I never get an emotional response of like fight or flight from red or green days. I just know that that is basically part of the process of it. All that I care is that my results match the back test. And if there's, a 3-month period where it's just significantly deviating from the back test, or we potentially have more slippage now that the space is more crowded, that really doesn't worry me because I'm still matching the back test. And by having that, we are now tying our efforts to the execution, not the goal. So, if you set a goal to make $1 million over the course of a year, and you got to 700 grand, you could beat yourself up and say that's a failure because you fell 200 grand short. But if you did the things day in and day out that you were supposed to do to get to that $1 million, and it ended up taking you till April instead of January to get to that $1 million, it's like there's no difference in your learning process. It was just some fictitious number. And the thing is if your life is deviated on getting exactly where you need to be in exactly the time frame, it's going to be hard to be happy and fulfilled. So just focusing on what you can control, which again comes back to the back test and the serenity prayer, which is just, God, please grant me the serenity to accept the things I cannot change, the courage to change things I can, and the wisdom to know the difference. That is really what trading is. And when we deviate from the back test or we think we know something, it can change. And the other thing that I like to tell people is trading is a gladiator sport. The more you play, the more likely you are to die. And the thing is, some people think that's scary, but it's like we're taking risk every day, and that is true. So the process that we can control is bringing our best self and executing to the best of our abilities. And the thing that I want to highlight with that is we could all read a chart or have some discretion, and that's our A game, and we can make a lot of money. But you will always fall to the results of your C game, which is your beat up back test or your emotional control. So the only thing that is guaranteed is your lowest level C game and what that backstop is. Your A game and B game can be varied by things because we're human. So all of the gains, in my opinion, if you're a systematic trader, are really bringing up that C game and understanding what that is. So when we get an emotional response, we don't necessarily act emotionally, but that's an important cue to tell us that I'm really nervous about this because my position size is too big. I'm really nervous about this because I have not done enough testing to have the conviction of it. And it's important to recognize that emotion for what it is and then kind of frame things in the positive sense of how you're going to do it, because that's ultimately your C game. And it's kind of an inchworm thing that once we inch forward with our C game a little bit, now our B game can inch forward, now our A game can inch forward. So the only way we move up our A and B game is by basically getting that C game up, because that's the level we always fall to and the only level that is guaranteed. So those will be the returns you're guaranteed to get. Another thing is, I think a lot of people should actually start trading zero DT, looking into the options. A few reasons for this is, since it is the S&P 500, the volatility is very, very accurately priced. Whereas if you're trading NVIDIA, even though a bunch of people are getting risk on it, like the government could come out with some regulation, or one of their suppliers could decide to not, give them money, or the government says they can't send it anywhere, and it can be down 20% in a day, and you're using a leverage instrument and you were holding that overnight, and all of a sudden, you lost more than half of your 25 grand. Whereas if you trade in the SPX, even if you're trading like a 10 wide spread, your max loss is $1,000 if you didn't use a stop loss, and then the market is open during the day. So if you use a stop loss at 2x, you would only lose $200, maybe plus $20 slippage or something. So that is something to note, that even though it's a big instrument, it's accurately priced. You don't have that overnight risk. So if you do make a mistake, you're going to get feedback and you're going to do it. And then also, if you're doing anything that is making money, it's not really based on luck. It's actually based on some robust mechanics, because again, the SPS is accurately priced. The reward's never going to be even remotely close to what some of those individual stocks are, but that's not really what I'm trying to pitch or trying to teach. I think what's really reasonable, people, is like, there's no reason. I don't think everyone should make 25 to 30% a year with a 10% drawdown. That's very easy. And as long as you're learning and putting some effort in within 3 months and some automation, I think everyone could do that in all honesty with this. So when you guys are starting to trade, you may be tempted to like stare at your screen all day as you see the P&L go up and down. And that is kind of part of it. So mentally, it may not be for everyone. It does get easier because the fact that you're doing it every day, you're going to recognize those patterns. And once you've lost 100 times on a trade and you've seen it win 120 times and you see those large numbers, it's going to feel a lot easier. But this is also kind of the whole point for backtesting, because our strategy is only as good as we can follow through with it. So like, you could look at a strategy that's optimized for return that does 100% a 20% drawdown. But the thing is, are you going to be able to keep deploying that strategy when you have a 20% drawdown? Whereas if you have a trade that takes every single trade every single day of the week and has a 10% return with a 3% drawdown, it's not as great of a return, but it's optimized for conviction for you to continue to follow through for that. And that's something that people can miss out on, especially in today where you could still work and you could automate that trade online. So you could literally check your account once a week and be like, oh, this worked, let me check it towards my back test. And, like I said, some people want to play super lottos and they kind of like the rush of trading. But if you're looking to trade for income, mentally, automating it and trading accurately priced instruments like the SPX with the backtest, at least for me personally, has been extremely easy to trade. As we're recording this right now, I've got 75 grand of premium on the market. I'm not even thinking of it because I've done it hundreds of times and it always ends up being okay. Another thing with zero DT when you're trading it is you'll think you're a genius, and then the market always has a way of bringing you back to earth. Just the thing I encourage to recognize people is like, I talk about it being a straight line, but your learning process doesn't necessarily affect your P&L. So your learning process may be more of a linear line, and your P&L is kind of like snaking over that. But the thing you need to realize is when you get that dip, you're higher on the next dip and you're making more progress. So you have a higher net lick amount. And the main thing is when you feel those drawdowns, and the thing is, what I always like to say is like drawdowns are worth every penny because you basically learn from your strategy and it gives you feedback of if it's working, if it's not working, and it gives you an emotional response of how much conviction you have in that. So that's just a different mindset to basically those drawdowns in the practice. That's basically assuming, if you had a hot hand in baseball and you had a hitting streak of 12 games in a row and then you struck out 3 times, 2 games in a row, you'd like stop, you'd change your swing. Clearly you wouldn't do that, but that's kind of how the numbers pan out. And another thing we can do with that too is a lot of people want to optimize some trade that has a 90% win rate and it filters out entries because they don't like losing. But the more things that you filter out and the higher win rate that you have, the losses can hurt a lot more. Whereas if you have a campaign train that maybe takes 5 trades throughout the day, time of the day, rather than just 1 trade with a 90% win rate, you're going to be able to match that backtest more because you're getting more of a complete picture of what could potentially happen. That's why the results are lower, but the results are less likely to deviate as well. So that's a psychological approach. It's basically what you could decide to do. But, if you're only a good shooter in basketball and you start missing shots and you suck at defense, you're probably going to get taken out of the game. But if you're a good defender, you're a good passer, and you're a good shooter, if your shooter suffers, you can always pass the ball fine and play good defense. So that'll keep you on the floor. And that's ultimately our game as well. All in all, anyone can do this. We're all regular people. It's just the fact of following through. It's the same recipe for everyone else. There's only one movie going on. Everyone is trading the exact same thing, and the same edges are present for everyone else. It's just a fact that whether people can do that. And the other thing too is I'll even see other people's strategies or people will see my strategies. And the thing that really gives me confidence and should give everyone else confidence is the fact that even if your strategy stopped working or it lost a lot of edge, the fact that you found it and you built the conviction to start that one in the first place, you're going to find the next one. You just have to keep on innovating. And people I see can get mad. It's like, oh, this doesn't work. It's getting crowded. People need to stop sharing. It's like everything in the world changes and develops. And the people that said, cars are worthless, we need to ban them, we need to keep horses, it's like, how did it work out for those people? You have to adopt it and get better. All it is innovation. And the more you do it, the better you're going to get at it. And that is basically the entire process. It's just continued improvement, and it's tied to the action, not the result of it. Thanks for watching. If you guys have any other specific questions, please drop in the description. I'd like to always answer what you guys have specifically. If there's anyone you would share this with, it's the highest compliment to me, and I'd continue to put these out if there's anything in particular you guys want to see, whether that be long form, short form, or backtest of the week. Like, comment, subscribe. If you guys want more of this, keep on hitting me up.